Okay, so you're on a runaway train heading straight for a cliff, and the engineer has no control over the train. Well, that is what the financial markets are starting to look like. So, what can you do about it? This is the Hey Ed YouTube channel. I am your host, moderator, and all-around nice guy, Edward Anderson. I'm not a financial advisor. Don't construe anything that I mention in any of my videos as financial advice. Always do your own research before doing anything with your money. Today, we're going to be talking about what's going on in the markets here, okay? We're going to talk about what is happening, why it's happening, and what you should be doing right now. So as I'm recording this, it is Friday afternoon on April 12th. Okay, so the markets today were down 475 points. That's the 1 month chart. Okay, and let's look at the 1 year chart. Okay, so this is what I want you to pay attention to. Okay, yes, the market has had a very rough week and a very rough month. But take a look at here. The next support level is at 37,000 here on the Dow Jones. But the next major support level is way down here at the $33,000 level. Now, if you're saying to me, well, Ed, that couldn't happen. Well, listen, we were down at that $33,000 level, just back in November, not that long ago. See this last big strong move up in the market here? Let's talk about that for a second, because it is very relevant. Okay, so the market has been on a sugar high, or to put it a little more dramatically, we've had financial heroin, being driven into the market's veins by the Federal Reserve with their talk about, lowering interest rates for this year. Well, 2 days ago, ice water was thrown on that idea when the CPI numbers came out, and it showed that inflation is running hotter than expected, which led the market to speculate that the Federal Reserve may not be cutting interest rates that much this year. In fact, maybe they'll even start raising rates again. And actually, if the Fed were sincere about their efforts to fight inflation, that's what they would be doing. They would be raising interest rates. But the market doesn't like that. The market wants cheap money. Now, if you think that the interest rates are already high, let me kind of, give you a little reality check, okay? We have a whole generation of people out there right now who have no idea of what high interest rates are. Back in 1987, when I bought my first house, the mortgage rate on my first mortgage was 19%. So 2 days ago, on Wednesday, the market had the CPI number out. So it was that big downdraft day, 2 days ago. And then yesterday, a little bit of stability, but not very much. But then today came around, and a few banks started to come out with their earnings reports. And JP Morgan and Wells Fargo, had a report that wasn't that nice. Now, the analysts were spinning it, best they could. But there are cracks in the dam here. I'm telling you, you got to start getting your money out of your banks, my friends. If you haven't started, please do so. And in the comment section below, let me know whether you've already started to reduce your exposure to your banks. And if you haven't, are you planning to? Please share it in the comment section below. I would love to hear from you guys out there. But the banks are not safe. The financial system is in real danger here. And I'm not saying that to be hyperbolic. I really mean that. You have to reduce your exposure to your bank, start putting your money into gold and silver, and establish streams of passive recurring income. So let's talk about gold and silver for a hot minute here. Gold is making an all-time high, and silver is starting to rally too. I think we're going to start seeing here in the silver market is you're going to start seeing a lot of short covering right now in the silver market. Silver could see $50 pretty quickly. I mean, in addition to all the other reasons for gold and silver to go up, you have central banks around the world who are hoarding gold, and they're trying to buy as much gold as they can. Remember, central banks, these are the people in charge of their respective fiat currencies, right? The fact that they're buying gold and silver should tell you everything you need to know about their own attitude for their own fiat currency. If they don't like their currency, why should you? Now, you're going to hear the politicians and the talking heads and the lobbyists talk about how inflation is down 50% from its high. But listen, it's still running higher than it should be doing. I mean, it's not like inflation has reversed. The current rate of inflation is on top of the previous rate of inflation. They're just talking about, the rate of which inflation is going up, right? So they're not giving back anymore. This is the acceleration is just one big game, and it really ticked me off. And you should be permanently ticked off at these people. The root cause of inflation is the spending done by our governments. They're irresponsible. These people are power hungry. The way they stay in power is by spending money to hand out goodies to the constituencies. Do you know that our current administration here in America just awarded today another $5 billion to some nonprofit theaters. These are woke theaters, right? No, they do plays on transgenderism and lesbian dance theory and stuff like that. People don't want to go to those plays, so they're losing money. But these drama majors at all these universities, they want their free stuff. They want their free goodies. They want to be able to get their little paycheck, even though there's nobody in the audience. And so the liberals in our government, they're ponying up another $5 billion to bail out these liberal woke theaters. And last week, our current administration just handed out another $7.5 billion of loan forgiveness to all of these woke college students getting degrees again in lesbian dance theory. And we, the taxpayers, we're on the hook. Look, let's be clear. Our government has no money. They are broke. They've never had any money. Any money the government gets comes from us. They come from the taxpayers. The government doesn't create or produce anything. And so the next time you go to vote for someone, remember, those people work for us, not the other way around. And you better start voting for your own personal interest. Okay, all right, let's get back to the markets. Okay, so look, in my opinion, the market is at real severe risk here. We could see another financial crisis. We haven't seen the black swan event yet. So far, it's been your run-of-the-mill, nasty market sell-off. But what if one of these black swan events, and there are a number of them that could happen, a major bank goes under, we start seeing, the $1 quadrillion in global derivatives start to unravel like they did in 2008. There's a large assortment of potential black swan events, any one of which could be the catalyst for a dystopian type financial sell-off. You don't want to be a victim in that. And all of these markets, the debt markets, the equity markets, the derivatives markets, the financial markets, the forex markets, the crypto markets, all these guys are intertwined. And if you think that you are dodging a bullet by being in an alternative investment like cryptos, well, let's take a look at the way cryptos are acting today. Okay, so this is the 24-hour chart on Bitcoin. And if you think that Bitcoin is immune to the stock market and other financial markets, you're wrong. Bitcoin is absolutely influenced by major financial events in other financial markets. And as we all know by now, Bitcoin is the bellwether. It's the big influencer in the crypto space in general, especially in the meme coin space. Look at the meme coins today, right? Take your pick. Meme coins, the past couple of weeks, really, they've been just getting destroyed. So if you're in a meme coin that you like and you're wondering what the hell is going on in your meme coin, there might not be anything particularly wrong with your meme coin. Your meme coin might just be getting caught up in the net of everything selling off. Now, there are a couple of ways of viewing this, right? You can view this as a really good buying opportunity, or you can see this as, a real big black eye. Now, let me tell you what is going to happen. If this is going to turn into black swan, catastrophic financial stuff, it's not going to go down in a straight line. Just like markets don't go up in a straight line, they don't go down in a straight line either. If you throw anything on the ground hard enough, it's going to bounce. So somewhere in here, there is going to be a bounce. The question is, does that bounce represent, the bottom and then it's going to keep going up? Or is it a temporary bounce, then it's going to roll over and go down again? This is what they call a trader's market. It's not an investor's market. This is a trader's market. And traders love volatility. I personally love volatility. Now, most people don't have the time to trade. That's why rather than trading, I would, refer you to programs like Daisy, which is closed now. You can't get into Daisy. And EasyBot. I did a video recently on EasyBot, and if you'd like to sign up for EasyBot, I'll have my description in the link below. Also, I'll put a link to the video that I did do where I interviewed the CEO of EasyBot. EasyBot is a software company, right? They're not a trading company. They're a software company. What you marry up their trading software with your exchange, your Coinbase exchange, and then you choose the crypto that you want them to trade for, and they trade it for you. And that software trading works in every trading environment. But if you're going to be trading the markets in here, you better know what you're doing. Get yourself educated and be disciplined. Again, most people don't have the time or the discipline to trade. That's why my suggestion to people out there is don't do it yourself these days. And remember, I used to be a trading instructor, so I love trading and I love teaching people how to trade. But we're in a new world these days with the advent of technology. You can farm out all the hard work of trading to a third party, like EasyBot or like Daisy. But Daisy's not available anymore for you guys. Okay, so listen, bottom line, I hate that phrase. Listen, what we're talking about here is, primarily preservation, primarily defense. Sometimes the best trade you do is no trade at all. Sometimes the best thing to do is to get out of the way and let the damage happen and preserve your capital. Hence, get your money out of the bank and put it into gold and silver. You should be doing that with the bulk of your money anyway. But in addition to that, develop some passive income streams. Now, I gave you Daisy, I gave you 7K Metals, I gave you EasyBot, and I gave you Blockchain Sports. So the two right now that I would focus on for you guys are Blockchain Sports and EasyBot. I've done videos on all of those. So just go to my channel and go back and look for videos on those programs. But if you have passive income programs there generating income for you day in and day out, you're kind of bulletproof. You want to become bulletproof. So if you're proactive right now, you will be very well rewarded in the next financial crisis. You don't have to be a victim. And in my little way of helping you guys out, I've got a free offer for you guys today. Today, I'm giving away free likes and subscriptions. It won't cost you a penny to hit that like button and the subscribe button. So please like, subscribe, and share. Ed Anderson, live from Minnesota, signing out.
Copy that.